There we go. Okay. Signal's a bit bad then, but we should be good to go. How are we getting on? I'm just going to put this link in and around everywhere just so I can make sure everyone's joining, and then we can crack on doing a bit of live trading. Maybe 2 seconds. If you guys have any questions as well, for those who have joined, if you have any questions, just leave them in the comments and I can get those answered in a moment. Before we crack on with some analysis, but we've got some good pairs to look at today. We've got the NAS, and we've got the XAU USD as well, which I will be probably looking to take some fractal like trades, some more scalping, in and out, 15-minute, 20-minute trades, taking part of in swings, smaller swings. NAS is definitely heading in a bullish direction, so we could look to get involved in some buys based on all the blocks that have been left over. Obviously, demand areas of demand with XAU USD. We're seeing prices bleeding out. I took part in a small long yesterday. We've seen that prices actually disregarded these three supplies, these three demand zones. So we can go ahead and get rid of these. We'll do some new analysis on this anyway, just so we can get a better understanding on the direction of this market. But predominantly, this is a bearish market. We understand this, and it has been since October time when it traded into this higher time frame supply zone here. We obviously went long into this market. We took part in a few positions. I tried to go short here. I got swept out, liquidity swept out, and then prices obviously traded lower. So my understanding in this market going bearish has been absolutely spot on. You can see that I was looking at areas of supply. Each one of these are supply zones, so I was looking to get involved from. Struggled to find the right entry. I like to be very critique with my entry points and where I look to get involved in the market. So it's been a bit unfortunate there, but we have just seen that prices traded into this area here of demand, of supply, should I say. Prices traded in. We now see rejection to the downside. So prices still heavily respecting areas of supply, which is not a bad thing. I also had this marked out, although price hasn't come to trade into that. So I'll update analysis in just a second. What I'm going to do is I'm just going to throw this link out on Reddit, and then we can crack on. But any questions, if there's any specific markets that you want to see me look at, let me know. I am going to just be scalping the markets this afternoon. I've been busy this morning, just with admin and things like that. But I'm just going to be scalping the markets this afternoon. I'm going to spend the next two hours, maybe hour and I'd say hour and a half to hour 2 hours, just trying to scalp the markets, look for some opportunities to get involved in and out, and then we'll go from there. But I won't be 2 seconds. Let me just need to share this link. And then we can crack on. This in here. Okay, cool. And then I'm just going to repost that. This one. Perfect. Right, okay. Might be 2 seconds. Happy days. Throughout this process as well, I will be updating my clients in our VIP chat. So If I do go quiet, that's why. But yeah, if there's any pairs or markets that you want to see me analyze, please just leave them in the comments below. But let's have a little look at gold as a whole. So if we just head to the weekly timeframes, we can see here that price has created a triple top. So this tells us that there is a lot of supply here that is stopping price from trading higher, right? Now, what this also represents, I don't know if you guys understand or look at candlestick formations or candle patterns, but when we see this happen, we would use this as a neckline. So when we have a break in this range or a break in this area that's somewhat distributing, then we can expect when price trades lower, we can expect price to then pull back and then start trading us in a bearish way, right? Because what we are seeing is we've now broken these protected lows, what would be considered protected lows, and we've started to protect the highs, and therefore we are trading in a bearish direction, in a bearish way, because that's the laws of bearish structure. What we are seeing here is actually a higher time frame distribution. So with that being said, unless we start to break these highs properly and create new higher lows, I am under the impression that this market is actually going to be trading us bearish for a very long time, which is weird to say considering this is a precious metal. But this is what price is setting up to do. This is on the weekly timeframes, and what we are seeing is a distribution. I think that's crazy. We see distributions happen all the time. A distribution basically represents price offloading buy orders and introducing sell orders. So it's creating that flip in the S&D balance, and that's what we're seeing here now. So as I say, what we've been doing as of recently is looking for areas of supply to get involved in short positions. I marked out a supply zone here. Price has traded up and into this. We are now seeing rejection to the downside. So we are definitely in the right direction, heading in the right direction. And we are looking at capitalizing in the right type of positions by looking for shorts. As this market is obviously trading us in a bearish way, it's protecting those highs and breaking the lows. So now when it comes to placing positions in the coming days, weeks, even today, what we should be doing is we should be looking for areas of supply that price can come and trade up and into to clear before trading goes lower again. So if we just have a look here on the 1 hour time frames, you can see that there is an order block that's been left over. So that's a point of interest for me straight away. And what we should be doing is we should be looking at all of this data to try and find anywhere that has been left unmitigated, where we have inefficient structure below or above. Obviously, in this instance, it's going to be below because we're trading a bearish market. But in a bullish one, what we'd be looking for is inefficient structure like this, followed by a high volume candle. So an order block like this or a point of interest, followed by that inefficient structure. Now, here, I mean, looking at this data, another exercise that I get my clients to do is if you are ever unsure and you want to try and get rid of a bit of noise, because I can understand looking at the markets, I'm very simplistic with my analysis and the way that I look at things. I don't like to over clutter my charts. But an exercise that you guys could do for those who are trying to learn about order blocks and are trying to learn about areas in price, what you could do is in a bearish market, you could mark out the peaks and draw the line back to where it's traded into, because what this tells us is that everything here within this area has been mitigated. Price doesn't need to come and trade back up and into this. The same with this here, right? All of this is being mitigated. Why? Because this peak has mitigated everything that's traded here and below. Same with this peak, traded into this and below. So everything there has been mitigated. So it gives us no reason to look at this or this. So by following that exercise, you could do the same here. So you could say all of this has been mitigated. There's no reason to look at it because this candle has mitigated everything below. What it does is it just filters out a lot of the shit that's on the market and some of the things that you probably don't need to look at. Because there's no reason for price to trade up and into that. So, I mean, that's a little exercise that you guys can do. It's just something, a tip that I give to my clients because it definitely helps. There is this here that looks as though, so I would go from the bottom. So when we talk about hidden order blocks as well, this is something I will be making a video on. I've not actually made a video on it yet, but I do plan on making a video on hidden order blocks as I feel it's very important. I was hesitant to provide it to everyone, just as it's something that, if you look at our YouTube channel, there is lessons on everything. You could binge watch all of our videos, and you would be able to trade based on our videos, because we literally go through every single thing. I think we may not have covered all aspects of risk management. We've covered a large sum of that. We've covered psychology. We've covered our strategy as a whole. We do our Sunday sessions every week, so you know exactly what we're looking for and what we're doing. You could honestly learn how to trade based on our videos. The only thing we haven't covered is hidden order block, and it's not so much a secret, but it's something that it changes your level in success exponentially. Now, this is obviously a video we're going to create, and I will touch base on it now. But when you look at this, right, so let me just clear this off. So I just want to zoom in on this and just show you what I mean by a hidden order block. So in fact, let me try and find, I just want to try and find a better example. I'm just going to try and find a better example for us, and then we can crack on with some analysis. Okay, I mean, we can touch on this. We can touch on this here. So do you see how in this, right, we obviously have high volume trading goes lower. So we understand that this is a bearish market, yeah? We have a lot of sells being introduced throughout all of these candles. Now you'll notice that here we have a wick to the downside followed by a wick to the upside. This is within a bearish impulsive wave. So what this tells us is that there must have been some buy orders introduced between the bottom of this wick and the top of this wick. Why? Because in order to create the wick to the downside followed by the wick to the upside, there would have had to be some sort, some bullish orders there present. So what we do, and what this represents, is actually a hidden order block. So I'm just going to highlight that out, and what I'm going to do is I'm going to actually go back in time. I'm going to press the replay button, and I just want to show you. If we go down to the 55 minutes, maybe 1 minute, it might show. Okay, so it doesn't actually show there. It doesn't actually show there, but that would be considered a hidden order block. And best believe when we see price trade up and into this area, we would have rejection to the downside. What I'm going to do is I'm going to find a bigger area. Let me just cancel this off. Because these are things that are missed all the time, and because of this, people miss out on positions. I'm just going to try and find an example. Okay. Let me have a look. Let's see. I want to find a good example, even to the downside, so even in the opposite direction. So even here, for example, so it would be the opposite for a bullish market. So it would be a wick to the upside followed by a wick to the downside. Why? Because within this we have bearish structure. So because prices come from here to trade to here. So because of that, prices had to travel down to obviously create this low before trading higher, followed by inefficient structure. So this is again would be an order block in the market. But it's not really a big one. But let's just see. It might not let me go down on time frames this far back, but we'll have a little look and we'll see. Perfect. So you can see here now that we look at the 15 minutes, so just going down one time frame, we can actually see how the order block presents itself. If we go to the 30 minutes, you can see that we have that hidden order block where we have the wick to the upside followed by the wick to the downside. We understand, though, by understanding the open and closes of candles, we understand that actually there is bearishness present within this. There are sell orders that are present within this. So because of that, that's an order block and a footprint that's been left behind by institutions. The second we go down to the 15-minute time frames, this order block presents itself to us. And this happens over and over and over again, and we see these all over the markets. People just don't understand how to read them and don't understand that they are actually hidden order blocks. That's a video that I'm going to create and put on the channel at a later time, but I'm just going to try and find another example, as these are areas that I capitalize on all of the time. How are we doing, mate? Stormica, how are we doing? I'm just discussing hidden order blocks. I'm going to do some analysis, some live analysis, and some live trades shortly. I just want to cover hidden order blocks very quickly, just so it's actually on the channel. I just want to find another example for everyone. Just go to the hourly time frames. This trade was a position that we placed recently. We have absolutely murdered this market through and through. This is a trade that we placed way back in September. This was a trade that I've just published on the YouTube channel because this was a crazy position, 1 to 22. I was risking 2% of my equity, so I could have made 44% from one position, nearly half of my equity back on a trade. Obviously, down to my risk management and how I apply my risk management, I didn't walk away with that much, but we could have. The entire swing was 22 RR, which is amazing. I'm just trying to find this some hidden order box quickly. Okay, perfect. So there is one here. We have seen price react to it, but it's not reacted to it as we thought it would. So you can see here in this example, it's a bearish impulsive wave that's traded lower. We have a wick to the downside followed by a wick to the upside. So we understand that from this wick to this wick, well, it's a line that's going up, so that represents bullish structure, right? As we go down on the time frames, it starts to present itself to us. So this would now be considered an order block. We have that inefficient structure below the doji, and now you can start to see the bullishness being introduced as we go down on the time frames. Now you can see the bullishness even more so, and you can see the order block here. So we could have refined our entry point to this candle here. That's your order block. But these are these display themselves in all shapes and forms all the time in the markets, and it's just being able to see them and capitalize from them. I am looking to take this market short again. I just want to double check that I haven't missed anything on here. Let's have a little look. Because price seems to have reacted to something, but I'm not too sure what. Right, so, okay. So this order block has been mitigated by this one. So it should be this. This hadn't mitigated that, so this has been left unmitigated. So now when we go back to this, and we can just correct that, price does trade into that. So price is now trading bearish. Okay, that's good to know. So now we just want to see price correct itself to trade us into another order block before continuing trading as lower. So I am looking to take this market short. We've got that area there, and then there is prices traded into that, so that's fine. We've got this area here. Let's see how price reacts, but we could look to potentially get involved in some short positions from this area and price. I'm just going to set an alert here. I want to get involved in shorts on the gold. There's a lot of unmitigated areas. Yeah. So I've got this one marked out. That's fine. That's been cleared by this. This has been cleared. That's fine. Everything else looks okay. So we could potentially look to get involved in some some temporary shorts on here. We've seen a new low created, which would say that this was a protected high within this fractal bearish structure. So we could look to potentially get involved in shorts from this market, from this area. What I'm going to do is just have that highlighted out like that. Does price come to mitigate that? No. We'll see what happens with this one. This could be another potential area to go short from. So I need to get that ready. And then US dollar CAD, let's have a look. We're just waiting for price to trade up and into this area of supply before taking this market short. If there's any markets that anyone wants to see me look at as well, let me know. I'm just literally going through my watch list just to get trades set up and ready. We want to see price continue in a bullish way with this market. Let me just go down to the 5. That's fine. We've seen that structure is broken to the upside again. Here. Price now will pull back, so we should be looking at this impulsive wave for any areas that have been left unmitigated. There's this candle here that's been left unmitigated. So I actually want to see price trade bearish. So I'm expecting price. So we want to get involved in some shorts right now. We can want to see price trade up and into this. And I'll show you what I think is going to happen. I want to see price trade up and into this, 50% in, 50% down into this one, and then up and into this. This is my setup, and this is what I feel price is going to do for this market. We'll see how price plays. But ultimately, I feel it's going to continue in a bullish way to trade us up and into that time supply zone. So let's have a look at short positions. So if we place the short from here, I always say 2 pips above the top of the zone. So it's going to be 3. It's going to be like here. And then I would take profit like this, 1 to 6. And then from there, we then want to see price go long. Obviously, it's more risk going short in this market because the prevailing trend is bullish. So realistically, the safest bet was to actually would be to trade price just in those bullish ways like this. But there's no harm in looking at short positions. We just need to ensure that we are safe when we look to place positions based on that. So I'm going to set an alert for that here. And then we can come back to that. Great British Pound to the US dollar, that's fine. I just need to double check everything's been mitigated here. There's nothing left on that. Let me just go down to the 30 minutes and just refine this now. Go down to the 5. Let's have a look. Okay. So we can see here we have, in fact, rather than doing that, what I can do is I can just make this more refined. So you can see we have wick to the downside, wick to the upside. We come across, price traded into this, price is traded into that perfectly. Do you know what I mean? When do you check for fair value gaps? I don't do fair value gaps. I trade based on supply and demand and order blocks that are present. I don't really look at fair value gaps. But something that I was just showing before was actually hidden order blocks. A lot of people will see an order block and they will just, people only mark out order blocks, right? But they don't understand that this right here. So what I've just marked out here is actually a hidden order block, because if you look at this market, right, this market is trading us in a bullish way. Yeah. Now, for price to close this candle here, there must have been bearishness present. There must have been sell orders present to get a candle close here and leave this wick left over, right? Now, when this candle's opened, it's opened here, and we've had a continuation in bearishness. So we understand that inside of this, from here to here, is bearish structure, yeah? And is bearish, sell orders, right? So that's actually considered a hidden order block that's been missed. Now, when we highlight that zone and we come all the way back over, you can see how price has come to liquidate and clear that area. Yes, we've seen price trade just beneath that, But as we go down, I was showing a perfect example just before. If we let me just press replay. I don't know if it will show it on here. It'll probably be on the 15 seconds, I'd imagine. I don't know, well, we can see here actually. You can see that the hidden order block presents itself. That's a hidden order. That was a hidden order block on the 5-minute time frames. It's now an order block on the 1-minute time frames, right? That's a clear order block. There's a red candle inside a load of green candles. Price has not come to clear that candle. It's a hidden order block. And then as we go down to the 1-minute time frames, you can see that we have that same thing, wick to the upside, wick to the downside, right? So again, we have another area there. That's what prices come to clear and trade into. And we see this happen all the time. People miss these things all the time. If there's ever a time where you're waiting for price to trade into an area and it misses it, and you're like, why has this happened? It's probably because there's a hidden order block that's present. So I'm looking to get involved in shorts on the NAS, looking to get involved in shorts on the XAU USD. We just want to wait for price to trade up and into this. I'm looking to go, if you want to scalp, I'm looking to scalp this market. I want to see price trade up and into this hidden order block before trading goes lower down and into this, and then trade us up and into this higher time frame supply zone here. So yeah, this could be a trading opportunity that we can get involved in very, very soon. I just want to wait for my alert to go off and then we can get involved. But yeah, this GU trade, in order for me now to look to go long, longer term, which I do want to, because I've got a higher time frame supply zone marked out. Just go back up. I want to see price trade all the way up and into this. See, so I'm expecting price to pull back, which it has done now, which is great. But what we want to see in order to now, when it comes to getting involved in a higher time frame swing, it's all good and well taking part in the markets when you're scalping. But when you're looking to take part in a higher time frame swing, we need confirmation that a trend is finished before we look to actually get introduced into the market, right? So what I would be doing is I'd be looking at this structure, and it could be fractally. So we're looking at the highs and lows that have been created, and we would say that this here is the last protected high. Why is this the last protected high? Because this high went to create the lowest low. This low is lower than all the other ones. So therefore, this is the last impulsive wave, right? So in order for me to look to take this market long, what I want to see is I want to see a break in that protected high. Why do I want to see a break in that protected high? Because in bullish structure, what do? We break the highs to create higher highs. You can see that we break every high and we protect the lows, yeah? So I want to see a break in this high because that tells me that bullish structure is being introduced into the market. Once we have that confirmation, we can then wait for price to pull back to set its first higher low, and then we can take part in in buy positions from that higher low being created. I hope that makes sense to people. It's the most simplest way of understanding highs and lows, protected highs and lows. I'm waiting for the right confirmation before placing a position. A lot of people will see price trade into a fair value gap. We'll see price trade into an order block, and they will just enter due to price trading in and rejecting to the opposite side. Now, that is very aggressive, and it depends on how aggressive you are with your approach. But me personally, I would much rather wait for further confirmation before looking to even take part in a market. And this is the confirmation that you want to be looking for realistically. So if I was to get a path tool out, what we want to see now is price is probably going to trade up and into this order block. That's going to introduce supply that may flip the balance temporarily before price finds more demand. So we may see price trade up and into this rejection to the downside. Price will then probably trade into this demand zone, or it might do it the other way around. I don't know, but we might see price trade up like this, trade into here, trade into there, break structure to the upside. Price will then put in a higher time frame correction or a higher time frame correction, and then trade us higher. And then we would get involved here, because what we have then waited for is we've waited for the break of structure, being this. We've waited for price to break structure. We're then waiting for price to pull back into a higher time frame demand zone, and then we obviously get introduced into the market. So it'll be nice to see how that plays out as well. So I'm just going to set an alert there, wait for the break of structure, and then we can look to get introduced onto that. This market, The last protected high would be this on the 1 hours. This is the only thing I hate about fundamentals is when fundamentals are introduced, or institutions are fully in control of the markets. We have high volume like this. So realistically, I want to be waiting until this protected high is broken to confirm bullishness. But it's a way away. Do you know what I mean? It's quite a distance away. So it's just it's long waiting. But it is what it is. So I'm going to set an alert there for that one. USDCHF. This is a market I'm looking to trade short. I drew this path out yesterday. Price is traded perfectly into it. We've seen rejection to the downside. So price is playing out perfectly to my analysis. I literally am now just waiting for price to trade back up. Now that it's broken structure to the downside, I'm just waiting for price to trade back up. Why is this the last protected low? Because this low created the highest high. Yeah, price has now broken that. What do? We look at the impulsive wave that broke the structure to find areas of supply. We get involved. Are you looking for liquidity slightly before taking trade? Yeah, we can look. So obviously you can imagine, right? I don't know how in depth your knowledge is when it comes to supply and demand and how involved supply and demand is. Everything is based on supply and demand. Okay, so when I don't know if you're a trainer person or if you like your clothes and things like that. But let's say that I don't know, there's a vintage car. Yeah, there's only I don't know 3 of these cars that have ever been made. The demand for that car is going to be through the roof because there's only 3 of them. Do you know what I mean? There's going to be a lot of demand for that car. So what does that mean? The market, or the price of that car is going to increase exponentially. But let's say that the factory then manufactured 1,000 more. A lot of supply is going to be introduced, and what's that going to do? That's going to decrease the value of this car. Why? Because there's a lot more of them now at this point, and the market works the same way. Obviously, it's not cars, but it's all about the currency, and it's all about supply and demand. So when we see that, it's basically like a balance. So if you just imagine like a weighing scale, like the old school weighing scales. Don't know how to draw this, but we've got like a pot here. This looks a bit weird. And then we've got a pot here, right? So one of them is supply. So we've got supply, and then this one is demand. Yeah. So we've got supply and demand. Let's say that there's 1,000 lots because we measure how much we're buying and selling of a currency in lots. So we've got 1,000 lots of supply introduced in the market, but we have 1,200 lots worth of demand in the market. So that means the demand is outweighing the supply. So because of that, the market is going to trade higher. Yeah, it's going to trade us in a bullish way. Now, what happens is when price trades up and into an area of supply like this, what the institutions are doing and what the banks are doing is they are offloading their buy positions. So they are then closing their buy positions in profit. Let's say that they buy in here because there's obviously an area of demand here. They buy in, they then close those buy positions here. So now they have closed, let's say, 200 lots, right? So they've now closed 200 lots. So they only have 1,000 lots of demand in the market because they've closed 200, let's say. Yeah, they had 200 that they bought in from here. They've closed that 200. What they have then done is they've then also they've also sold into the market, right? Because this is a supply zone, right? So now they've actually sold maybe, let's say 300. That's not a very good 3. They've then sold 300 lots at this area in price, yeah? So now we have 1,300 lots of supply, and we only have 1,000 lots of demand. So the balance has now flipped to the downside, and we're going to see price trade lower. So it is literally just a weighing scale, right? That is constantly forever changing based on these areas in the market. And the reason why these order blocks are left over is because they're just footprints. They're just clues that are being left over for institutions to manipulate. That's all it is. Because they want specific areas to get involved in where they know that they can profit. Not very often do they lose. So it's just, if we understand where these areas are, and we understand, the only difference between us and them is they probably have more. They probably have more information about exactly how much. So obviously, we can use an indicator called session volume profile HD, right? And this is a perfect example. So you can see here this session volume HD, right? Do you see this line here? This red line. This red line represents where there's a lot of volume that's being introduced. I have not brought this session volume HD thing up this whole session, and you can see that it falls perfectly in line with where my supply zone is. So that's just proof in itself. You can use that as added confluence and somewhere to see where volume is introduced. But these institutions and banks, they all know exactly how much is being introduced at these footprints. Had an eye on supply and demand. Has been a break from trading for. Have been on a break from trading for a year, trying to get started again. 50 hours of trading, supply and demand. Yep, it's a long slodge, mate. It's a long slodge. I mean, if you use YouTube, I would recommend having a look at our videos. We have loads of videos on YouTube. We have loads of videos on YouTube about supply and demand. We have loads of videos just on Forex in general. Yeah, it's definitely worth looking. You would learn so much if you're struggling with supply and demand and you're struggling with looking at order flow. You would learn so much from our YouTube channel. That's without blowing smoke up my own arse, but there's a lot of people out there that give out information that doesn't either make sense or they don't actually understand why price is doing the things it's doing. A lot of the time, people say like, okay, so this is just as another example. People say, oh, right, okay, well, this is head and shoulders, yeah? People don't actually understand what a head and shoulders is. They just go, oh, this is a head and shoulders because we have two shoulders and we have a head. They don't actually understand what's happening in terms of price action. They don't understand that this is actually a distribution. They don't understand that this is the market's way of offloading buy positions and loading up on sales. Do you know what I mean? They don't understand this. This is a way of the market's manipulating traders. So when people go, oh yeah, look at this strategy or look at this, they don't actually know why these things are happening. And this is part of the problem with Forex and all these people out there that have all, unlimited information to give. They don't actually know the reasoning as to why things are happening. And when you understand the why, when there is more logic to what you to what you are looking at, and when you have a greater understanding on the markets, your psychology is going to improve exponentially. Because you've got to remember that, like, when it comes to placing positions, I don't know if you've actively traded, but if you place a position that you're not actually too sure on and you don't really have as much confluence as you should do, then that's going to open the door for impulsive decisions and emotional damage, emotional decision making. Do you know what I'm saying? So if you have a greater understanding on the markets and you have a greater understanding on why the markets are doing the things it's doing, I understand why the markets is currently doing this. I understand why the market has to pull back here, and the reason. And because I understand and I have a greater understanding on why the markets do the things they do, when it comes to placing positions, it alleviates almost any psychological impact on the positions that I place, because I understand that the markets have to do the things that they have to do. And if price is trading in a direction that is not what I think it's going to do, then that's absolutely fine, because there's probably something I've missed. Do you know what I mean? But just having a greater understanding on the markets and the flow of the markets, you'll see a massive improvement in your trading psychology and the trades that you're placing as well. Here we are. I'm waiting to go long on this. I'm just going to leave this up here, I think. But can you see here as well, like I was saying to you about hidden order blocks, you can see here that we have the wick to the downside followed by the wick to the upside. So we understand that inside of that should be bullish structure, yeah? As we go down to the 1 minute time frames, that bullish structure presents itself to us. Do you know what I'm saying? So, and this happens all the time. But yeah, these are two positions that we can look to get involved in. I don't know if you were here before, but with this being a bullish market on the higher time frames, there is more risk getting involved in short positions just because that balance overall is obviously outweighed by demand. So to be completely safe, we should be trading with the prevailing trend on the higher time frames. So our best bet would be to go long from this area of demand here. However, there is no harm in taking part in shorts from areas of supply because price does have to correct itself. And you can see here that this low created this high, and these lows come lower than this high, so we have a fractal break of structure. So this could just be the lower high that's being created before continuing to trade as lower. Let's just see how the market plays out anyway. It'd be interesting to see. USD CAD, get a liquidity on the 3 minutes. So I was just reading, let me have a look. US dollar CAD, I'll have a look for you now, buddy. And if there's like anything, 1 second. If there's anything that you want me to go over, or any markets you want me to go over, let me know. US dollar CAD 38076, 38076, somewhere here. Yep, you're absolutely right. There is an order block here, mate. So I'd go from here to here. There's also this one here as well, which I'd be hesitant for. But yeah, there's two areas there that we could go long from. We have seen price put in a large impulsive wave, so I wouldn't be surprised. We can see here how price is consolidating within a range. I wouldn't be surprised if we see price actually put in a corrective wave to trade us lower. There is this here as well. I do think price may trade us lower down and into this. I could be wrong, but I do believe that's what we will see. You can see here how demand is starting to run out. Look how much it's slowed down compared to this impulsive wave. In the space of 7 hours, 68. And then from now we have near to nothing, and price has just kind of grabbed liquidity from here. So I would imagine price may come to traders down and into this, grab more demand, and then traders higher. Because what would happen is sell positions would get offloaded, so the opposite thing happens. So price would trade down. As price is trading down, sell positions are offloaded, so sell positions are closed. The people are banking in on shorts. So supply is getting scarce, it's running out. What happens? Price then trades into this. Loads of people, institutions, banks will then close their shorts. Any shorts that they held from up here will be closed here. Then demand is introduced. That skyrockets price, trades price higher, creating an impulsive wave like this. I think XAU USD pairs will be bearish until DXY flies the gap. 100%. Gold is definitely bearish. This is another thing. Like people think it's the same with the Nasdaq, right? Like I had so many people criticize my analysis on the Nasdaq, on TradingView and on LinkedIn. I'm quite what's the word? I can't think of the word, but I'm quite well known on LinkedIn in my industry, and a lot of people were a bit a bit surprised at my analysis on the NAS, that I wanted to go short. So I marked out, I don't know if you guys have seen, but I marked out this here, this supply zone for everyone. If you can go back on TradingView and you can see it for yourself. You can go back to Sunday Sessions videos on YouTube. I marked out this area of supply and I said price is going to go short from here. And what have we seen? We've seen price create clear lows and highs in the market ever since. What we're seeing now is price creating a lower high again, and we're seeing price trade lower. I'm now just literally waiting for price to pull back before continuing to trade as lower in this market. I'm looking to take this market short again. We just want to see price come to clear these areas here. And the same with gold. I called shorts on gold months and months and months and months and months ago. And we have seen price starting to create lows in this market. Price was traded into this supply zone that I had marked out for ages. I said 2002. You can literally go back onto my Sunday Sessions videos from maybe 2 or 3 months ago, and I said 2002. I want to see 2002. As soon as price trades into 2002, we should be looking to go short. Look what's happened. It's bled the fuck out. So, yeah, I definitely think price will trade lower, continue to trade as lower. I'm just now trying to find areas to go short from. Obviously, it's not safe just placing short positions willy-nilly without having good areas to enter from. So I've got this order block marked out. I just want to see price trade up and into it, and then we can look to be present in this market with short positions. But yeah, it's definitely going to bleed out, mate. 100%. Price is just about to trade into this as well, so it'll be interesting to see how this plays. We'll probably see some bearishness and then a continuation and bullishness to traders up and into this, or into this, and then traders lower. US dollar card, I'm still waiting for price to trade up and into that before trading lower. Okay, so price has done exactly as I said with this. Price traded up and into this area from here to here. It's then traded us lower into here, and now it's trading higher. So price is playing out perfectly with this one. For anyone who has been watching, you could have placed a long and a short and now a long again. I want to see break of structure to the upside. As soon as we have a break of structure to the upside, I'll be looking for price to pull back to get involved in more longs. That one's a bit of a write-off just because of fundamentals. I'm going to wait for this high to break. This one's not a write-off. We just need to wait for further confirmation before I look to get involved in this market. I want to see price trade up and into this before trading lower. So I'm going to put a path tool on here as well. Like so. US dollar card. There's liquidity here, but I feel price is going to break through. We'll see. We'll see what happens. But for the most part, it's a little quiet. It's just a waiting game now. Literally just a waiting game. As soon as an alert goes off, I'll have a specific trade and idea, hopefully, for us. But the good news is price is playing out exactly as we are predicting. How long have we been live for? Oh, I did not mean to do that. 49 minutes. Okay. I want to try and get a good trading idea play out before I call it. Spare me 2 seconds, people. I'm back. So we have seen price trade up and into this, which is perfect. I'm back. Oh, let me mute that. Let's mute that. So we're seeing price that traded into this. Now we want to see rejection to the downside to trade into this demand zone, and then obviously price trade then up and into the higher time frame supply zone. So that's good. We've also had the NAS that has given us a notification. Price is approaching this area, which is good. And then we also had, did we have another market? Oh, no, just your story had a NAS. I just want to see price play out on here, just so we actually have this as well as just a trading opportunity that we could have placed. But let's see now. Go from there. Gives us a 1 to 4. What's price at the moment? Just shy of 1. And now just going to wait for price to trade down and into the demand zone, and then I'm going to look to go long in this market. With the Nasdaq, we want to see price trade up and into these areas before we look to go short. Again, another bearish market. If there's any markets that you guys want me to have a look at, let me know. I'm going to get rid of this path now because you guys have seen that price has played out perfectly to this. I just want to see specifically where there to there, so price has come to clear that. Must have been something within this. Price has traded into that now. We're seeing further bearishness. Okay. I want to see price now take off higher. So you could potentially look for longs. There's this area here that's a bit to clear that potentially. So have a look at the NAS. Okay, so NAS has actually traded in now. So anyone who went bullish on NAS, well done. This is playing out well. We'll probably see rejection here. Hopefully some rejection to the downside, probably to trade down and into one of these areas that have been left unmitigated because supply will be introduced. So it's going to trade into one of these, maybe even the one that's here by current price, but there is this here as well. So I want to see price trade into an area of demand now before trading us higher. It may trade us just down into this before taking off again, or it could trade as low as this one here before taking us higher. We'll see. But ultimately, we should, until we have confirmation of bearishness, we should be looking for buy positions because price is trading in a bullish way. If there's any pairs that you guys want me to analyze, or if there's anything you want me to go over, please let me know now. I'm going to call this session. Just move the thing now. There we go. I'm going to call this session in a few minutes. But if you guys want me to analyze anything before I do, let me know. I'll be back in just a second. Right, just going to double check there's no messages, and if not, I'm going to call it. So I've got some videos that I can make for some clients, and I've got some things that I need to do this afternoon. Just double check this chat. I think must close at 1. USD card. Yeah, it's done well. It's done well, that area that you suggested. So in terms of closure for any buy positions, I would say just below this last protected high here. So I'd say that you're good for. If you got involved here, let's say, I'd say you've got a 70, you've got an 80 pip run, 1 to 6 risk reward ratio. Nice easy trade there. Very good. Very, very good, mate. Nasdaq's traded up and through, so that's fine. So it must be coming up to trade into this one. This is traded up and through, so enough demand has been introduced here. This is why it's important that when we do trade against the prevailing trend, we are cautious of the positions we're placing. See, so in this respect, like I said to you earlier, I was waiting for buy positions here. This is a prime example why, because the prevailing trend is bullish. So by us getting involved in short positions against the trend, just obviously holds more risk. But price did show rejection from there, which is cool. We just want to see. I want to see price correct itself. I want to get an opportunity in to trade this market bullish up and into the supply zone before actually trading price short. So we'll be taking the market short. As you can see, price is just within a corrective phase at the moment. But I want to take advantage of the end of this correction before trading the market lower. The area of demand is where we would be doing it from. Price seems to be holding this zone, which is cool. We can expect the next bull run trading up. Your ESD is playing out bullish as well, so it's fine. This is trading higher, that's fine. Everything's playing out fine. Again, for me to get involved in GU, I want to see a BOS to the upside first, just to take advantage, just to obviously get the confirmation I need. Right, what I'm going to do is I'm going to call this session a close. If you have any questions or any queries, drop me a message on Telegram. It's Luke GFX, like this. You can drop me a message on Telegram and I'll get back to you as soon as possible with any queries that you guys may have regarding the videos that I posted, the live session, trades, whatever it may be. Just leave the suggestions and I'll get back to you as soon as possible. But I appreciate the people that have dropped in today. And yeah, I'll catch you all in the next one.